What's up everybody, it's Ben Tech here, and let's talk about trading. Listen, most people jump into trading thinking they're going to get rich quick, but the truth is, it's more like building a real business than gambling. Welcome to our ultimate guide on creating a disciplined and profitable trading plan. We're not talking about risky, get-rich-quick schemes, okay? This is about building a solid foundation for consistent returns. Just like any successful business, you need a plan, and in trading, that plan is your roadmap to navigating the markets effectively. Remember, a disciplined trader is a profitable trader. It's not about chasing hype or making emotional decisions. It's about calculated risks, strategic entries and exits, and sticking to your plan even when things get bumpy, because trust me, they will. Look, I know everyone wants to be a millionaire overnight, but trust me, setting realistic goals is key. Instead of aiming for some crazy 100% return in a month, why not focus on consistent daily growth? Even a small gain, like 0.5% or 1% each day, compounded over time, can lead to some serious returns. Think about it, 1% a day for a year is over a 300% return. That's the power of compounding, my friends. It's not about hitting home runs every time, it's about consistently getting on base and letting those gains work their magic over the long haul. And the best part, by focusing on smaller, achievable targets, you're less likely to make impulsive decisions that could wipe out your account. Remember, slow and steady wins the race. Alright, let's talk about risk management. Because let me tell you, protecting your capital is way more important than chasing big wins. It's like playing defense in basketball. You can't score if you don't have the ball, right? You need to be able to weather those inevitable losing streaks and come out on top. That means never risking more than you can afford to lose on any single trade. Seriously, I can't stress this enough. A good rule of thumb is to risk only 1% to 2% of your total account balance per trade. That way, even if you have a string of bad trades, you're not blowing up your entire account and can live to trade another day. Here's the thing. Trading isn't about taking every single opportunity that comes your way. It's like dating. You don't just marry the first person you meet, right? You've got to be selective and choose your trades wisely. Focus on high-conviction setups that align with your strategy and risk tolerance. Remember, it's better to miss out on a good trade than to take a bad one. Overtrading can lead to impulsive decisions, increased risk, and ultimately, more losses. So be patient, be disciplined, and wait for those high-probability setups that give you the best chance of success. Now, when it comes to my trading style, I'm all about short-term and intraday trading. I'm talking scalping and day trading strategies that capitalize on those quick price movements. It's like catching waves on a surfboard. You're in and out, riding the momentum for a quick profit. This style requires focus, discipline, and quick execution. You need to be able to read the charts, identify those opportunities, and get in and out of trades with precision. It's not for everyone, but if you're looking for a fast-paced, exciting way to trade, this might be your jam. Listen, there are thousands of financial instruments out there, but I like to keep things simple. Stick to the major liquid pairs like EUR/USD, GBP/USD, USD/JPY, and XAU/USD, also known as gold. These pairs offer tight spreads, high liquidity, and plenty of trading opportunities throughout the day. Why complicate things, right? These major pairs are like the blue-chip stocks of the Forex market. They're well-established, heavily traded, and less prone to wild swings. Focus on mastering these pairs before venturing into more exotic instruments. Here's a little secret. Using multiple timeframes is like having a superpower in trading. I'm talking about looking at the 15-minute, 1-hour, and 4-hour charts to get a comprehensive view of the market. It's like zooming in and out on a map. You get the big picture and the finer details. Use the shorter time frames like the 15-minute chart to pinpoint your entry and exit points. Then, zoom out to the higher time frames, like the 4-hour or daily chart, to confirm the overall trend and make sure your trades are aligned with the bigger picture. Trading with the trend is like going with the flow instead of swimming upstream. It's much easier and more profitable to trade in the direction of the prevailing trend. That's why it's crucial to align your trades with the higher time frame trend, especially the daily chart. Think of it like this. The daily chart is the boss, and the lower time frames are the employees. The employees might have some short-term ideas, but ultimately, they have to answer to the boss. So before you take any trade, always check the daily chart to see what the overall trend is, and make sure your trade is in alignment. So there you have it, my ultimate guide to creating a disciplined and profitable trading plan. Remember, trading is a marathon, not a sprint. It's about making smart, calculated decisions, managing your risk, and staying consistent with your strategy. By following this trading plan, you'll be well on your way to becoming a disciplined and profitable trader. Don't get discouraged by setbacks. They're part of the learning process. Remember, consistency and smart decisions are the keys to long-term success in trading. Now go out there, stay disciplined, and crush it in the markets.